I'm Matt Bouchard here in New York City for NAREIT's REIT Week 2018 Investor Conference. Joining me today is Dave Nunes, President and CEO of Rayonier. Dave, thanks so much for joining us today.
My pleasure.
Now, could you start by comparing your expectations for the fundamentals across your three timber segments, the U.S. South, Pacific Northwest, and New Zealand?
Sure. Our largest segment is the U.S. South, and there's kind of two big characteristics that drive that. We've got pulpwood demand, smaller logs. That tends to be driven more by demand for linerboard, which is our largest customer segment. That underlying fundamental is pretty healthy right now. We're seeing lots of demand, and so that's a pretty strong part of the market. The other side is sawlogs, and sawlogs are driven by the combination of housing starts, which is probably the biggest driver, and repair and remodel activity. And there you've got a more complicated story. The housing recovery has been a very gradual one, and with that backdrop, you've got a couple things occurring. You've got less volume coming across the border from Canada, which has been a positive, but on the negative side, you've got a lot of inventory build that's occurred differentially across the U.S. South. And so for us, we really try to focus on where our footprint is. And for us, about 59% of our U.S. South footprint is in the top two markets. And so we like to think about that in a price elasticity standpoint, where you don't have a big inventory build. We're more responsive to changes in lumber price as that housing recovery kind of continues its gradual pickup. Moving to the Northwest has a much more balanced export and domestic mix. The domestic mix is driven by the same fundamentals as the South, namely housing starts and repair and remodel activity. And the export mix is driven by a combination of China and Japan, depending on the quality and the species. And unlike the South, which has excess supply right now of timber, the Northwest has a relatively constrained supply of timber. And so with that backdrop, we're seeing very strong pricing in the Northwest because all those markets are really performing quite strongly right now. So that's quite a strong market. Moving to New Zealand has a heavier mix of export versus domestic. It's roughly 50-50. The domestic market is driven by three things today. It's got a very strong component of export lumber production, a lot of that going to China. And then you also have the greater Auckland market. Auckland's one of the fastest growing metropolitan areas in Asia. And so tremendous translation to demand for lumber locally. And then lastly, you have the rebuild from the Christchurch earthquake. And so those three factors have led to a pretty strong domestic market. And then on the export side, you have China and India. And both of those countries are demanding a lot of wood. And so New Zealand is probably our strongest performer right now in a relative sense of the three markets, and we really like the diversification we get across really all three of those platforms.
Now, what trends are you seeing in U.S. lumber production, and how is that impacting the percentage of your mix into the domestic for export markets?
It's quite differential by region. I think the biggest trend that we're seeing is with the decline in the harvest of mountain pine beetle volume in Canada, you're seeing a lot of Canadian capital coming into the U.S. South and basically announcing capacity, either increases or greenfield capacity. We have roughly 5 billion board feet of capacity that's been announced, and is in some stage of production, and that's against a backdrop of 19 billion board feet of production last year. So we're going to see a pretty sizable lift in production across the U.S. South. It's going to take a few years for all of that to come into play, but we see that putting a lot of price pressure across the South. But again, it'll be differential by market depending on how that price elasticity is. That's probably the biggest driver as we see the impact between domestic and export. Last year, for example, we had 12% of our total volume across the three segments go into China. Roughly 29% of our volume from New Zealand, 28% from the Northwest, and 2% from the U.S. South. The biggest growth component of that we see is in the U.S. South. It gets back to that excess inventory. We and other players are working hard to increase that proportion of volume flowing into the China market from the U.S. South. And so that's probably the most exciting development. Interestingly, in the Northwest, it's somewhat the opposite. As we see stronger domestic markets and a more evenly balanced market, we're actually seeing export volumes decline in a market share sense. So the domestic market is taking a little bit more of that market share away from the China market. So you have lots of moving pieces.
Dave, thank you so much for joining us.
My pleasure.
For more from REIT Week 2018, be sure to visit NAREIT's website, REIT.com.